Good afternoon and welcome to our monthly webinar presented by the Bureau of Business Research here in the College of Economics, the College of Business at the University of Nebraska, Lincoln. The subject of our December webinar is going to be the 3-year forecast for the Nebraska economy for the years 2022 through 2024. My name is Eric Thompson. I'm the director of the Bureau of Business Research, and I'm going to be guiding you through our PowerPoint presentation today. Just a few features about our webinar I wanted to point out before I begin. First of all, we have a question and answer window that you can access at any time and type in questions you might have. You can also type in a question at the end of the PowerPoint presentation. In any case, we will be answering the questions at the end of the PowerPoint presentation. There's also the chat window. Our philosophy is that you should feel free during the webinar to chat with other webinar audience members and talk about whatever you'd like to while the webinar is going on, so don't be shy about doing that. With that said, I'm going to go ahead and give you the details of our forecast for the Nebraska economy. Before I get started, I'll mention that this forecast is a joint effort or joint product of the University of Nebraska-Lincoln Bureau of Business Research and the informal group called the Nebraska Business Forecast Council. The Nebraska Business Forecast Council has been around for several decades and is a collection of economists from utilities or private sector organizations, state government, and the university system. Currently, we have economists from NPPD in our council, as well as several economists who work with state government, as well as a number of faculty here at UNL, but also at UNO. So that's the group that developed the forecast, and let me talk a little bit about the outline for our PowerPoint today. So we're going to briefly talk about the national economic outlook. Nebraska's economy is very tied into the national economy, so it's hard to get a sense of where the Nebraska economy is going unless you talk about the national economy. Then we'll look at the Nebraska economic outlook, focusing on employment, and then third, focusing on income. So in terms of the U.S. economy during 2021, I think this holds for Nebraska as well. Inflation has emerged as an issue as the economy has recovered. So the economy has recovered a significant share of the jobs that were lost during the brief recession of April and May 2020. Of course, there was a significant job loss during that period. But later in 2020 and during 2021, quite a few of those jobs have recovered. The economy is moving towards full employment. And as sometimes happens after recessions, well, it's certainly more severe this time, inflation has emerged as an issue as the economy has recovered. So that's going to be a challenge we'll face going forward, and even something of a risk for the economy because of the efforts that will be required to try to tamp down inflation. But setting those risks aside, I think it's fair, the conclusion of our council was that the most likely outcome for the 2022 to 2024 period is that economic growth will continue in our state and the nation. The pace of growth obviously will slow from the torrid pace we've had in 2021, and there are those risks, as I mentioned, to the economic outlook, but the most likely outcome is the economy will continue to grow, GDP will grow, jobs will be added, income will grow during this period. The good news, too, is that we're transitioning now from an economic growth that was supported by government stimulus. Increasingly, the growth is supported by private sector activity, growing employment and demand for both goods and services, as well as business investment. So there's a path to self-sustaining growth that's out there before us. And we do think that growth can withstand withdrawal of fiscal and monetary stimulus. So the Federal Reserve has started curtailing their bond purchases. At some point that'll be complete, and the Fed probably will start moving to a stance where they start being a net seller of bonds. So some of that monetary stimulus will be withdrawn. The Fed next year will probably, we expect, will start raising interest rates, so that'll be another withdrawal of monetary stimulus. And then there'll be some withdrawal of fiscal stimulus as some of the special transitory and special stimulus payments to households and so forth that happened in 2020 and then here again in 2021, those are not expected to be continued in the future. But we think economic growth, we expect those things to happen, and we think economic growth should be able to withstand that withdrawal of stimulus. The risk of the forecast is that the Federal Reserve will need to do more than simply withdraw stimulus. It may need to take steps to rapidly and sharply increase interest rates rather than steadily increasing them as we expect. Obviously, the Fed will only do that if inflation remains high, if it remains high even after supply shortages start to ease, and if they conclude that the cycle will not break, if inflation will not break unless they intervene in a more drastic way, they likely will do that to preserve our long-term pattern in the U.S. of moderate to low inflation. So we won't know if that more drastic action will be necessary until supply chain issues start to ease. That'll happen presumably sometime next year, hopefully in the first half of the year. And then the Fed will choose its process. But we think the most likely thing is there'll be a steady increase in interest rates. If there is a rapid, drastic increase in interest rates, that obviously will significantly slow the economy and does contain a risk of pushing the economy into a recession. So there's always risks with any forecast, but we thought the risks are because of this inflation issue. Obviously, ongoing concerns with the pandemic would be a second issue. Because of these special circumstances, the risks are inflated this time, and we thought we should spend some time focusing on them. But again, the most likely outcome for the economy around the country and here in Nebraska is for continued economic growth. So I'd like to talk about some of the details of that most likely economic outcome. So let's go ahead and start looking at the recovery of the Nebraska economy. You also see some information for the U.S. economy. So we think both in the U.S. and in Nebraska, growth is going to be, and employment is going to be more robust in 2022. I don't show 2021 here, but these employment growth rates are both down from what we've seen in 2021. But 2022, there's a few sectors of the economy, leisure and the hospitality, restaurants and so forth, that have not fully recovered. Local government employment took a big hit during the recession, has not fully recovered. So those two sectors of the economy will be adding jobs at a faster than normal rate during 2022. We also think that 2022 will be the year where more workers rejoin the labor force. So in Nebraska, around the country, labor force participation rates are down about 2%. And some of that loss will be permanent. Labor force participation rates are ticking down over time due to the aging of our baby boom population in the country. But some of those lost labor force participants should come back. We think that'll also happen in 2022. There's some news at the national level this morning, some evidence of a significant return of people to the labor force during the month of November. So we think that process will be playing out over the next 12 months. So those are the reasons for the faster growth both in the U.S. and Nebraska during 2022. And then things will, certainly in Nebraska, will settle down into the long-term growth rate, perhaps a little, in terms of employment, perhaps a little faster than long-term growth rate in the U.S. in 2023 and 2024, because again, the U.S. economy has further to go in terms of recovery than Nebraska does. Nebraska is further along in our economic recovery. So you see there pretty good growth for our state, a state that adds population maybe at 0.6, 0.7% a year. You can see employment will be growing faster than that throughout the outlook period and about twice as fast as that in 2022. So there'll be more opportunities for people here in Nebraska, certainly in the coming year, but also over the coming 3 years. So let's look at a little more detail at some key sectors of the economy, particularly sectors where there's some interesting patterns occurring. So you see the list there. I'm going to start with retail trade sector. So retail trade sector employment declined sharply during the recession. There were periods when stores needed to be closed. A lot of consumers, in any case, rotated in 2020 to shopping more online, and that led to less local retail employment. So we lost almost 4% of our retail trade jobs during 2020, and we only recovered about half of those in 2021. So that's a sector of the economy where the long-term trend in terms of employment is headed downward. Part of the reason for that is that rotation towards online shopping. A lot of people that were occasional or maybe never an online shopper learned how to do that during the pandemic, and so that's probably accelerated the process towards shopping online, and that was, of course, a process that was happening anyway. There's also ongoing automation in the retail trade industry, more and more sales going into big box stores. Even within stores, there's more automation of stocking and so forth. In Nebraska, we're seeing a lot more self-checkouts, for example, another type of automation at stores. And so there's great potential for labor saving on the part of the retail trade sector. I suppose the other part of it is we know we're going to have a slower growing labor force with the aging of the population. We're not allowing for as much international migration as we used to. And so there's going to be some rotation with the slower growing labor force. Some of the sectors are going to need to economize on labor, use less labor. And so we do expect retail trade will be one of those sectors, along with wholesale trade. We'll see some others that will lose workers to faster growing and higher wage industries within the economy. So because of these processes, we think that retail trade employment will fall by 400 or 500 jobs per year over the 2022 to 2024 period. That's not too bad. There's 100,000 jobs approximately in this sector here in Nebraska, but about 0.5% of the jobs will go away over time due to this natural process that I've described. Let's look at services, which is very much in contrast to the story for retail trade. So service employment declined even more sharply, 5.6% during 2020. That's not totally surprising. The service sector includes leisure and hospitality, which was the hardest hit part of the economy, as well as barbershops and beauty parlors, some of the personal service industries that also were impacted heavily, at least for a period, by the pandemic. And so I'm not surprised to see that sharp decline in employment. But about 2/3 of those lost jobs have already been recovered by 2021. Note the faster recovery than we saw for retail employment. Now, what's in services is a very broad sector, makes up about 40% of all employment. It includes healthcare, which of course is our largest individual industry in the state, which also tends to grow a little faster than the overall economy, which makes sense. With our aging population, there'll be growing demand for healthcare. Also, healthcare is a very innovative sector with new treatments, new services that are being offered all the time, and innovation is always attractive to consumer spending, and so that's also causing more growth in healthcare spending. There's also business and professional services. So these are the businesses that provide services to businesses primarily rather than households. So that sector is growing rapidly, creating a lot of high wage jobs actually, and things like accounting firms, consulting firms, engineering firms, marketing firms, as well as services to buildings and temporary services, some other things. So it's a key to this sector is a key to our economy. It's helping all sorts of industries get more efficient and productive. And so we expect that sector to grow in the future as well. And then finally, leisure and hospitality, which, as I indicated earlier, expecting to bounce back a little bit, continue to bounce back in 2022, and growth will be a little stronger in that year. So during the forecast period, we expect this service sector, which already accounts for 40% of the economy, employment in the Nebraska economy, to account for 60% of the job growth. So it's going to be a faster growing industry, and its share of the Nebraska economy will grow. 2022, where growth will be fastest because of the bounce back of leisure and hospitality. The sector should add about 8,500 jobs, or that's 2.1% employment growth. It'll moderate after that, job growth at about 1.8% in 2023, 1.5% in 2024. Those are more the typical job growth rates that we see in services compared to an overall employment growth rate in Nebraska that's typically 0.8, 0.9, 0.10%. Let's look at manufacturing, always an industry of interest. Manufacturing industry employment here in Nebraska has recovered. It's slightly higher in 2021 than it was back in 2019 before the pandemic. Big part of the reason for that is our food processing industry has been very strong with a lot of growth. But really, the industry has benefited more broadly, especially in non-durable goods, from a number of factors. We've had very low interest rates, which is positive for investment, but also positive for consumers. We've had a weak dollar, helps in terms of competition on international markets. And of course, households have had a lot of spending due to the stimulus payments they've received, and perhaps even business. And so that's created a great demand for manufactured goods. So for all those reasons, this sector's been able to fully recover. Now going forward, we think we'll see long-term trends reappear. So in Nebraska, durable goods employment, because of rapid increases in productivity, tends to fall by a few hundred jobs every year. The output of the industry is growing, but the employment needs fall. So we expect that to continue. Durable goods, machinery, farm equipment, things of that nature, employment will decline by about 0.3% per year. The growth will occur in non-durable goods manufacturing, which will grow by about 1% in 2022. Again, food processing will be a big part of that. So that's 500-600 jobs. And then grow a little more slowly in 2023 and 2024. So good outlook for the manufacturing sector. Won't be a big job generator, but there should be some job opportunities created on net. And the industry sales will grow, and the industry will continue to be a driver of our economy, along with agriculture and some of our key service sectors. Let's look at some other sectors of interest. We have construction. That's growing, actually grew rapidly even during 2020, and also in 2021. We expect more construction jobs to be created in Nebraska. There's a great demand for housing. There's business investment in buildings and so forth going on. As we move through this period, obviously there's been a commitment by the federal government and by Nebraska state government too to spend more on infrastructure. So we expect good growth in that industry. Transportation and warehousing hasn't grown a lot over the last decade in terms of employment. Part of that is due to challenges finding truckers and so forth. Those problems have been exacerbated right now, especially long-haul truckers. But there has been growth in this industry recently. We expect job growth to continue in 2022. Part of that is the sort of last mile drivers or local drivers that deliver packages to people's homes. But after 2022, we think we'll go to more of the long-term pattern of limited job growth in this sector. Perhaps a continued growth in the need for last mile drivers will balance a loss in employment in long-haul trucking, and perhaps also in some job loss in the rail industry. Financial services has been an engine of growth in the Nebraska economy. We expect that to continue over the forecast period. So that's our outlook for employment. Again, we expect good, strong employment growth in 2022 and trend employment growth in 2023, 2024. Long-term patterns will reemerge with job growth in construction, non-durable goods manufacturing, finance, and services industries. And a decline in employment, but not overall economic activity, but a decline in employment in retail and wholesale trade and durable goods manufacturing. Okay, what about the outlook for income? Well, obviously farm income is an important component of income here in Nebraska. And agriculture actually is, by some measures, held up reasonably well. during our recent recession and been part of the reason that Nebraska's economy has done a little better than the economy in other states. In fact, large government payments during 2020, as well as an improvement in prices later in that year, allowed Nebraska farm income to reach $5.7 billion in 2020, which was tied, or approximately tied, for the third highest annual farm income on record, at least in nominal terms. There were some ongoing payments due to the trade, perhaps trade war is not quite right, but trade negotiations during 2019, and support payments for agriculture, including those related to the pandemic. So those things certainly helped in 2020 as well as 2021. The main thing in late 2020 and 2021 was there was a surge in crop prices, and this will allow the higher income to continue here in Nebraska. If we expect that crop prices may not stay as high as they are now, but it should be a good few years for crop prices, higher rather than lower prices for commodities, farm commodities. And we think actually with the strong prices this year and some ongoing farm payments, Nebraska farm income can reach a record of $8.1 billion in the year 2021. So actually a record by quite a bit over our next highest farm income. However, as generous farm payments continue to fade, but commodity prices stay strong, farm income will fall back a bit from $8.1 billion, but it'll be around $6 billion each year over the next 3 years. And that, like I said at the beginning of the slide, a level of $6 billion is among the highest annual farm incomes we've seen in Nebraska, at least in nominal terms. So we have a pretty positive forecast for Nebraska agriculture. It would be very difficult to stay at $8.1 billion on a sustained basis, but we think farm income can stay quite high. Well, what about non-farm income? Even in Nebraska, that is the vast majority of income. That's kind of an interesting situation with non-farm income. Obviously, in 2020 as well as 2021, non-farm income benefited from a sharp increase in transfer payments. And in 2021, there was also strong job growth. Obviously, inflation was a factor as well in wage and salary income and so forth. Now, those components, we've had a run up in transfer payments. Some of those transfer payments, there's plans to continue them, but quite a large share of the transfer payments are going to be temporary in nature and are going to be withdrawn in 2022. So earned income from job growth and new wages will continue in 2022, but there's going to be a sharp drop in transfer payments. And so when you do the math and you combine those two things, overall farm income will be flat basically in 2022. So there won't be much, if any, growth. However, beginning in 2023, once we've recalibrated transfer payments, we'll be back to more of a steady state situation where non-farm income will grow faster than the rate of inflation, and we'll have some growth in real personal income and even real per capita personal income. So we're expecting growth of 3.6% in 2023 and 3.1% in 2024. Now a bit more detail about the outlook for non-farm income. You see the numbers I just stated there in the left column under NF income for non-farm income. You can see the inflation outlook. We expect inflation to stay high in 2022, but then begin to moderate due to Federal Reserve action and easing of supply chain shortages and rising labor force participation out in 2023 and 2024. And you can also see that taxable sales will be strong. So I know non-farm income is not expected to grow much in 2022. However, there's still a lot of unspent stimulus money out there. If you look at your neighbors, there's probably a few people that spent most of that money and a few people that saved it all, and other people that are in the process of spending it over time. And I think it's that third group that will allow us to have solid growth in taxable sales and consumption in 2022, even if the income is going to be flat. Taxable sales also will return to more normal patterns in 2023 and 2024, growing at about 4%. So those are the highlights of our forecast for the Nebraska economy from the Nebraska Business Forecast Council, the UNL Bureau of Business Research. Appreciate you joining our webinar today. I think now is the time for me to try to answer any questions that we've received. Okay. So there's no questions at this time. We'll see if some questions come up. While people are thinking about that, I'll just mention that you can follow our research. So on a monthly basis, we're putting out 1, 2, 3 reports about the Nebraska economy or the Midwest economy, sometimes the national economy. So feel free to follow us and learn that information on LinkedIn, Facebook, Twitter, and of course our website. You see the information there. You also have the option to subscribe to our newsletter, which comes out several times a month. If you'd like to do that, please send your preferred email address to our email account at bbr@unl.edu. Of course, we'll have a seminar series in the spring as well, and that'll be announced here in the coming weeks. I think a few questions have come in. So anything about real estate and or property management? That's the question that I received. So, well, the outlook for real estate should remain pretty strong. There's some pent-up demand in for home buying. There may even be some pent-up demand for apartment building where, due to shortages in supply and labor shortage, construction supplies and labor shortages, people haven't been able to begin apartment projects that they would like to do. That's certainly true in the single-family home sector. Despite what the Federal Reserve might do with short-term interest rates, I would expect long-term interest rates will remain low. They probably come up a little bit from where they are now, but those long-term interest rates are really a global price, and there's great demand for U.S. securities. That's unlikely to change. So I think 10, 30-year interest rates are not going to rise that much. So with rising incomes, I think the demand will be there, especially if prices start to moderate as some of the supply and labor shortages ease over time. I think we'll see a lot of home building activity, more homes coming on the market, more opportunities for people who sell real estate or for property managers. What does the economy forecast indicate for tourism? Well, obviously the ongoing pandemic can create some challenges for tourism, but especially in Nebraska, a lot of the tourism activities are outdoor activities. If you think about fishing, if you think about our great state park system, crane migration, College World Series. Of course, that's just the tip of the iceberg of all the tourism attractions we have in the state. So I think that this sector can benefit right along with the rest of the economy. Now, it is part of leisure and hospitality, so that is a sector that faces some challenges attracting workers. That'll continue to be a big problem. It's a little bit like retail trade in that sense. But I think the demand will be there because the incomes will grow, and even in 2022, when the income may not grow, that unspent stimulus money can support people's spending. Projection for farmland values. I'm afraid I don't have that. That tends to be forward-looking. I think we had gone through a period where farmland values had fallen during the some years during the second half of the last decade. I think we've returned now to a pattern of growth. And so I would expect with good incomes that there'll be stability or perhaps further growth in farmland values. But that's really the Department of Ag Econ that has the most information on that topic. Rents are going up. How will that affect our growth overall? So yes, that's one of the drags on the economy. The cost of housing and rents are rising. As more income is allocated towards that, there's less to spend on other things. But again, income growth has been very strong. Good income growth is likely to continue. And then again, as some of these supply shortages began to ease in 2022 and labor force participation rises, more labor becomes available, it should be possible to expand supply a little bit more in the sector and for rents to start to moderate as well as home prices. So that's definitely an issue, an excellent question, but I think we can make some progress on that in the coming years. Do new COVID strains and the short-term economic effects they have play? Oh, okay. So we did consider the potential for COVID to continue to impact the economy. I think it's been an ongoing challenge for consumer demand, and consumer demand has been strong overall. It'd be even stronger without COVID. There is not a majority, but a meaningful share of households that are a little more restrained in going out and spending in the leisure and hospitality sector, retail, or just in general. A little more reserved when COVID is spreading more quickly. So I do think it'll have somewhat of a negative effect, particularly here in the winter months, just from Delta, and then of course there's emerging concerns about Omicron. We're just kind of in the part of the year where COVID is more challenging in our part of the country, and that certainly will affect demand somewhat. Well, that was a great group of questions. Let me thank you again for participating in our webinar and for all your good questions. And please, everyone, have a great holiday. We look forward to seeing you next year with our spring webinar schedule. Thanks again.